Okay. Welcome, everyone. This is Brendan from Rocket Dollar. I'm happy that you're going to get to join this fireside chat today. We are partners with Regiment, and what we've tried to do here in this webinar series, we're just trying to educate in a lot of different alternative investment ideas and at different asset classes. A lot of people come into a Rocket Dollar account. They may have one asset they know really well, and they're not really familiar with a lot of others. Sometimes they love the idea of alternative retirement accounts. They absolutely love taking control of their dollars, investing in different types of projects and funds. However, they're not really aware, or could just be a bit overwhelming to digest how many options there are. The IRS gives us a really wide list, almost everything. So these webinars are intended, hey, let's really educate on different asset classes, both that can be interesting, thought-provoking, and also make money for your retirement account, to build your retirement account on. So today we have Regiment, an investment bank out of Chicago, and then Regiment Echo, which we have with great experience in the entertainment industry. So Mike, you want to just introduce yourself, and then I'll tell the fun South by Southwest story that I got here.
Yeah, absolutely. Mike Cavanaugh with Regiment. Really excited about today's fireside chat with the Regiment Echo crew on the Entertainment Venture Capital Fund. So we'll dive into some bios we'll start with, but Brendan's got a nice story to tell before we jump into sharing the biographies of our panelists.
Yeah, so back when I was working in Chicago, I was talking with Rodger, and he said, "Hey, we're just sitting at the trade desk," and Rodger's like, "Hey, I'm in some entertainment business stuff as well. Have a movie debut, so I got to see one of his movies in Chicago, which is really fun. But then down here in Austin, as you obviously might know, South by Southwest, that is one of the biggest, just absolutely ginormous entertainment events in the United States. It sadly got canceled last year, given the circumstances, but comedians, movies, musicians, everyone's just coming to kind of showcase their wares and say, hey, this is a really cool project I've got going on. So I just saw Rodger, hit him up. He said, hey, got a movie debuting at South by Southwest. I got to get a special ticket for it. I got to show up and cut the line from 40, 50 people, all desperate to get into the showing. For a movie called St. Francis that ended up being a great story about Chicago. So Rodger and Andy and Kenny, I'd love for you to introduce yourselves. Just tell us a little bit about what St. Francis is and kind of some of the experience that you guys have in different parts of the industry.
So I guess I'll start off. My name's Rodger Welp. Sorry you can't see my mouth moving, but yeah, I'm a film producer. You're based here in Chicago. I basically I started off in the futures business. I've been in the financial, 25 years plus in the financial industry here in Chicago, with a focus on futures trading in the global derivatives markets, managing client assets in the alternative investment space. And I had an interest in entertainment as an actor. I really enjoy acting, something I've always had something on the side that I've enjoyed. And then basically in doing that, met a lot of young, talented creatives in Chicago that, needed help making their ideas come to fruition. So I started producing about a handful of years ago. Basically, St. Francis was, we won the coveted Audience Choice Awards. When Brendan mentioned the fact that there was a line to get in, well, I didn't even know what in competition meant at South by Southwest. Well, that meant that you were one of 10 films that were voted on for the Audience Choice Award. And we ended up winning that for Best Feature Film. So it was a wonderful experience. From that point on, it's very, very political with the film festivals and whatnot, but basically through that met a ton of new distribution contacts. Therefore, my ultimate goal was to eventually combine my two passions, and that's what Regiment Echo is doing.
Awesome. Thank you, Rodger. Andy, I'd love to hear from you, and then Kenny.
Yeah, I grew up, I guess, in media. I've been in media since I was about 14, working and started in live broadcast, sports broadcasting, and graduated onto, producing for film and TV. Gosh, maybe 10, 15 years ago, moved to Chicago, partially for the tax credits, also for family. And the tax credits presented a really nice business case for film and investment. And since that time, I think the Chicago or Illinois based production has gone about fivefold, sixfold, upwards of close to 700 million. I think they were projecting for 2020 before the pandemic happened, and they're projecting that to happen in 2021. I met Rodger probably my second or third day here, honestly. And we've always tried to figure out a way to work together, formulated a couple different ideas that we didn't execute on. And then St. Francis came by, and I read the script, and honestly, it challenged me as a father, and it challenged me as a kind of a, I guess, hard-headed male, and looking at things and having a more sensible approach to things my daughter and my wife deal with day in and day out, which is just a normal part of being a woman. And I jumped in and I said, let's go. I'm really glad I did. It's been just a great critical success, and I'm really happy for the team. Even today, it actually got listed in Variety and IndieWire, one of 40 some projects with a likelihood of being nominated for an Academy. I think that's a long shot, but just being in the conversation is just amazing for the creative team behind it. I too have produced and been involved in finance and distribution for the better part of a decade, and was looking for a vehicle to put that experience into a more viable, repeatable process. And having met Rodger, and then by way of Rodger, Mike Kavanaugh, came up with the Regiment Echo model, and then he introduced to Kenny, who's kind of the anchor from a security standpoint, and giving us the backbone of the fund, which allows this to, kind of happen.
Yeah, and the purpose of the funds is to make some type of return, and I think that's something when this conversation is first brought up, people just kind of miss a little bit. Oh, this is just creatives, this is not to make money or whatever. But Kenny, love to hear about your experience and what you're bringing to the fund.
Yeah, sure. So Diffuse, founder CEO of Diffuse, and what we do is we incubate and operate funds. So think of us as a fund platform. We come in very early with would-be fund GPs, and we help them refine their thesis. Basically, think through what they can do to de-risk it from a fiscal control, corporate governance, thinking through the modeling, check sizes, diligencing, underwriting, all of the nuts and bolts of actually running a fund. And I'll briefly my background. I started actually at 18 at a high frequency trading firm called Getco. I was maybe their 15th employee, and 10 years later, I left a 1,500 person public company. So definitely an interesting experience. But while I was doing that on the side, I started spinning up a bunch of fund vehicles, did a handful of real estate funds, moved over to venture capital. So at this point, I think I've started from scratch about 7 different fund vehicles. So Diffuse is an extension of that. Basically, I made every mistake under the sun, and I'm trying to help people bring a little bit more efficiency. So specialize in what they're good at, and not what they're not good at, or more importantly, what it's not worth their time to learn. And also try to take some of those mistakes I made and help them avoid repeating them.
Mm-hmm. Awesome, thank you, Kenny. And part of this regiment theme as we go through different asset classes has just been, with alternatives, you're more closer to your fund managers than a stock fund on a mutual fund. You're miles away from it. So this is an alternative investments. You get to know your managers more, and you also have to check on their experience. And that's some of the experience that Kenny's bringing in so many different asset classes. Mike, I'd love if you kick off some of our first questions here.
Yeah, and thank you for the introductions, guys. Brendan's talking about asset classes, and venture capital obviously is acknowledged as a asset class, and Regiment Echo is a venture capital fund. But Andy, Rodger, maybe you could touch on the entertainment space within the venture world as an asset class. How is it an asset class?
Well, I think just looking at content alone as an asset class, and something that's worthy of inclusion in a diversified portfolio, is something that we really hammer home. And having that in a slate format, which is the fund, allows you to look at it. You mentioned venture, looking at it as, okay, 20, 30, 40 projects and spreading out that risk, giving yourself that many swings at the bat, it gives you a much higher chance for success. So, there's certain things you can put in place to at least, provide yourself with a floor of that allocation. But, looking at it just as you would any other alternative investment, it kind of takes away the smoke and mirrors that is often, thought about or, equated to film investment. And you always, if you talk to somebody who's done it once, you can see kind of a wrinkle in their brow, like, I did it. It was, it was bad communication and we lost all our money. And I can almost guarantee if you talk to an investor and they've done one movie, it was either wonderful or bad. There's no in between. And there's a myriad of reasons why that happens. But I can also guarantee you, if you're looking at it as in a fund perspective and spreading that over a slate, you're going to have a much better experience. You're going to have a much better return profile and be able to look at it more of a traditional investment rather than, hey, finding a director who has a vision and going to swing to get into Sundance or South by, because that's certainly not the best approach from a financial perspective. Yeah,
it sounds similar to angel investors that have only made one investment in a startup. They either hit it big and continue to invest, or they have a loser, so to speak, and then stop and curse at investing as an angel in startups. Rodger, do you have anything to add as entertainment expands, and how is it its own asset class?
Well, just would like to add the fact that since I've been in the futures trading space for 26 years, that's kind of a very similar approach that our model has, where you have to manage your risk. You have to have your stops in, right? Same thing with our projects. We want to make sure that we've got backstops in to kind of protect the investor. That's how I'd say the diversification, just in general. My investors in the films that I've produced thus far have actually come from this space. Maybe it was because they had a bigger risk appetite, but more importantly, it was that they trusted that we were managing a situation very similar to that as I did their money in the alternative investment space. So it actually is very, very, very similar in that way.
Yeah. No, it's interesting. And, I'm myself new to the entertainment space. And I know Kenny is too. He might have some experience, but Kenny's not a producer like you and Andy are. Kenny, maybe you could, with your risk management background, coming from an HFT trading background and venture capital, and how asset management is always about assessing and mitigating and managing risk. Maybe you could give a little insight as to, from the diffuse persona of managing the fund, what was the appeal? What opportunities do you see in the entertainment asset space?
Yeah, absolutely. Well, entertainment overall is just interesting, right? You have the returns-driven reasons for investing, and then you have the impact, right? For lack of a better term, where it's like, I just like to get engaged with cool projects. And the reality is, this is an asset class that has both, right? If you do it right, you get to have really good returns, but then also it's just fun to be able to, hop on Netflix and you can go see something that you helped create, and it's like that non-tangible, relatively tangible, that value add is nothing to sniff at. But also historically, this asset class does do very well. But what you do need is the right team. And that was what excited us most. With Diffuse, the way that we run our process is, we say glibly all the time, we really want to engage in a fund where there's about 30 people on the planet that can execute that particular fund strategy. And we felt that we found that in Rodger and AJ in what they do. So that's exciting. And then the other things that Rodger and AJ touched on, which I think are key, diversification, right? Any good investment, you need to diversify. You need to go out and you need to have a clear process for investing, right? How are you underwriting? How are you going to quantify your investment decisions, right? Like who are the service providers? Because that makes a big difference as far as whether the fund feels institutional grade, whether it's doing all the things right. And in this case, with their particular strategy, we were able to get to a clear decision-making, quantifiable process with clear underwriting standards, things like that, which a lot of folks that this is our first foray into entertainment finance, but a lot of the folks we have spoke to subsequently, they don't really have a process, right? It's more of I'm going to invest in what I like, and that is the beginning and ending of what they do or what they know. And that's really not a super effective way to create an investment strategy. And that was just very nice that the Rodger needed to take the time to work with us to really think that through and create that process.
Yeah, it's fun to watch this team come together with Regiment Echo, because you have that fun and glitziness of the entertainment industry, but it's, being partnered with the discipline and risk management of the financial world, and it's still a ton of fun. Like going to a premiere and being able to scoot in front of the line because you know the producer, kind of fun. So we've mentioned diversification, and maybe, we all know how that looks in a stock portfolio, but buy this many stocks in this sector, offset that with some bonds, get some alts. Like, we know how to diversify in a traditional investment fund. How does diversification, and this is to the group, whoever wants to take a stab at it, what does diversification look like in a venture capital fund for entertainment?
So the standard argument for VC funds, and it applies here as well, is the distributions are not normal, right? In the sense they're not Gaussian, right? So it's not that hands the standard just like that everybody is used to. The term that it's not actually accurate, but it's close enough. It's more like a power law distribution, and that distribution of outcomes is actually pretty consistent between entertainment funds and VC funds, where you have a very small number that account for 90, 95% of the returns, and a lot of them are dogs. So your ability to screen out the ones that are clearly going to underperform goes a long way towards skewing you in the right direction. But then if we do buy that this is a power law distribution, you need to have a sufficient sample size to use the super, we'll keep going with the technical jargon here. You need to have a sufficiently large sample size to actually capture that. And the larger the sample size in a power law, the more likely you are to have that really high outcome. So realistically, if you're coming in, you're going to pick 1, 2, 3, 4. Yeah, the odds, like everybody's been saying, the odds you're going to hit it out of the park are pretty small. You really only start to see the diversification when you're in that 20, 25 range where it starts to become meaningful.
Yeah, absolutely. It's a numbers game, and there's a lot in between there too. And that's where, having that many projects on your slate that you're allocating and dividing that risk upon, there are many things that go even after you've underwritten and said this is great. There's the execution process, which also has other areas that you need to control and protect against, because you can have the best laid plans and everything on paper looks like an A-list grand slam, and then the market may shift by the time you bring it to market, and instead of what you think was your lightning in the bottle film that's going to give you your 10x really doesn't. But as long as you have different protections in there that the dogs, so to speak, aren't complete losses, and you have protections, whether it's a cost plus or something else, those dogs don't wipe you out. They don't give you the grand slam, but and then the other ones that you think may just be average, but again, in that execution phase, which is the production, you do catch lightning in a bottle. And because you have these 20 different projects, 25, you have the opportunity to keep swinging until you do catch it, and then one of them they'll just take off. I mean, the numbers and the statistics speak for themselves on that range, just like you said.
That's really interesting. I'm going to drill down on that a little bit more, but first we've got a question from the audience. I'm going to slip in here because it's a good question. And the question's from Bill. It says, what type of diligence is done that is specific, all caps, specific to a media content venture capital fund that might be different from another more typical fund asset class? We'll throw that one out to the group. I had a feeling Kenny might lean in.
No, I'm going to punt it with a little nudge to AJ and Rodger. One of the things you might want to talk about on that is like a genre film versus a comedy film, and how it like is similar with like the total addressable market in VC funds?
Yeah, I guess I would equate that to fear is an international language that travels. So, a horror film has more international appeal than comedy. What's funny in the US may not be funny in Spain. And so you have a universal theme, gives you a more commercially viable project. And how you do the due diligence into that is to speaking with your what I'll call monetization partners, which are your distribution. And what Regiment Echo is doing is aligning themselves with multiple distribution partners, and they're the boots on the ground selling the projects for you, and knowing what they see and what their data is on what's selling helps you to kind of reverse engineer what you're going to produce, and helping fill those content mandates, helping fill voids in the marketplace. That's, I think, something that's very specific to the entertainment industry that, besides, making sure, the team is, vetted, and you have, a story that can, be a very commercial viable property. Aligning what the market is kind of looking for is very, very important,
as well as I'd say aligning with the talent that has the value in the current marketplace. That's another very important thing that we know in advance, that they've got the numbers on what certain talent might equate with a distribution agreement, what they're willing to bet on with this project because of this talent, and so on and so forth, that we've gotten attached to the project. Another big thing.
Yeah, very good point, because that can provide further underwriting. Have a talent that's worth, throw a number out there that's worth, I don't know, $500,000, and you were a little leery of wanting to have to pay that person $250,000 for a couple of days on set, but you do the math, and they're worth double their cost. You're like, okay, come on in for that cameo. So there's a different things that you definitely want to look in from a casting standpoint. So very good point.
And I'd add two terms. That was considered above the line costs. So when we dissect a budget, another thing we look at is obviously below the line cost. And being a certain part of every project where we are going to know when and how the money is spent and if it makes sense. So we will dissect the underlying budget with making sure that the costs, as far as locations, various underlying things, crew, and so on and so forth, if they align well with the project. So just in general, making sure the money's being spent the way it should be as well on a day-to-day basis during the production of the film.
Great. We had a question from the audience asking how they might be able to put some projects in front of the fund. I told Andres that Andy, Roger, that you would just type your email addresses in the chat at some point during the fireside chat here. If you guys could, whenever you get a chance, just type in your email addresses for anyone that would want to contact you after this event. This is very similar to like a tech startup, like venture capital fund. Is you're taking your experience in the industry, and you're basically watching over the production from what I hear you guys saying, and leveraging your distribution contacts to help that film have as much success, film or TV show or project, have as much success as possible by leveraging that network and experience. Roger, you've been a producer and actor. Maybe you could talk about how relationships help you move projects forward, like when you're making the investment, like what types of relationships are key and fundamental to an investment from the fund.
I can tell you that right off the bat, I always link the first project that I acted in that anyone would know of would be Public Enemies with Michael Mann. And on the set of that project, I developed a lot of relationships with a lot of people that I still to this day lean on. I would say in the very first thing for me when I started producing, and it's still to this day, as these actors have, further developed and expanded their careers, I lean on them for to get in front of big name talent. I was lucky that my very first film I made for $30,000. Just like trading, you only learn how to make films by doing it, by making it. And I was able to get, it was a dialogue-driven film called Not Welcome, which Brendan was at as well. And I was able to get really good talent, both locally and to fly in, stay with me at my house. This same talent today is able to put us in touch with Frances McDormand. Actually, if you didn't know that this was happening, getting a script to talent like that is never, even when they say their agent says they read it, they've never read it, right? Having contacts like that on that side of the industry has been very helpful for me moving forward, and continues to be. That as well as casting agents in Chicago. St. Francis, the little girl in St. Francis. I acted in multiple commercials and things with children, and very often, your actors, when you're producing something, will act up or down, just like golfers do, right? Play up or down to the talent, right? And this little girl, I was very involved in casting her, just nailed it, and ended up being one of the keys, I think, with the film moving forward, was that she was so good, so ahead of her time, that dealing with casting, what I was getting at, I'm sorry, was dealing with casting agents locally. Like, that was the one role that I wasn't sure of. I didn't have friends that were kids or had kids, right? That was so important and crucial to the success of this project. So I was able to lean on and pay very little to a local talent agent here that I really trust, Pascal Rudnick Casting, and they found her for us. So that's a good place to start. Andy, if you want to take over from there.
Yeah, I just, in all business, and certainly in the financial one, it is very much similar to entertainment. The relationships are everything. I mean, I have some mentors that I was lucky enough to grow up next to, that were instrumental in creating the USS satellite system for broadcast TV, and I've leaned on them forever. And I continue to plug away at the mentors that have been there since I was 15. And, like Kenny said, I've made every mistake there is to make. I've learned from it. Even as we roll up, the fund here, how does this make sense? How does this look? The relationships with the distribution is probably, for me, one of the biggest things, because when you look at films, 9,000 or so are produced each year. Only, what is it? 6% of them receive meaningful distribution. Without distribution, you have no chance of recouping or even coming close to an ROI. So those relationships that we collectively have garnered over our, when you look at the whole GP, almost 30 years of experience is, priceless for us. And those relationships that you build and the trust that you have, you can ask the question, hey, what is this worth in the marketplace? Where do you see this? And they may say, it's not very good. I know you love it, but the market disagrees with you. Okay, then you pivot, and you got to make sure you're not too in love with the project, because it just may not find a place in the market. And that's where you have to be kind of grounded to the fundamentals and the thesis that Kenny talked about earlier.
Yeah. You mentioned one thing there with, learning from our mistakes, that seems to be the overarching theme in anything related to finance and business. You make small mistakes, don't repeat them, learn, and then, go bigger once you've learned. But you also mentioned pivots. One interesting thing to me, and just being behind the scenes and learning more about the entertainment industry through my involvement with Regiment Echo, just being kind of the fly on the wall, so to speak. Maybe, and Andy, Rodger, Kenny, whoever wants to take this one, tell me like the pivots that you've seen, or like the disruption that's occurred since last year when the COVID lockdown was announced. If any, I'm assuming every industry was probably touched, and there's no difference in entertainment, but how much of a pivot was there? How much disruption from the COVID lockdown was
Right.
there?
Well,
Um,
got it. Well, obviously the biggest pivot was more streaming and less screenings, right? I think that, Netflix added like 16 million new subscribers in the first 3 months of 2020. That was, and I was going through actually at the time the release of St. Francis. So I was in New York in February, then out in March, and we were getting great reviews, looking forward to a great theatrical, release.
Wide release.
Yeah, wide release. And then all of a sudden after LA, luckily, the big what do I talk, reviewers and whatever had already seen it or had seen it in New York and LA. So we got some great press, but then it ended. We did not get our Chicago premiere, which was 2 weeks into March. So, despite the fact that we thought that was going to be a huge hit to St. Francis, we had agreements with independent theaters across the country where we agreed to, hey, if we would allow them to stream the movie at certain times, just like it would in the theater, and we would share in the revenue. So these theaters would also share in the revenue, and that was probably, I'd say, the biggest thing is how distribution is changing and has changed since COVID. And who knows when, that's going to, how much theatrical releases and viewings are going to change things going forward. But that would be a number one. To premiere or not to premiere would be another big thing, where like a lot of the big studios, pushed off premieres, Wonder Woman 1984, so on and so forth, to release at a later date, and in a lot of things like Mulan, Disney Plus just put it out on Disney
Right.
Plus. But I'd say
Right.
the third thing, that would be the second. I'd say the third thing to me would be the pricey production delays. Now I think we had a lot of people that tried to be the first one out. And why? To make a film since COVID, because there's a huge disparity now in creative content. All these places like Netflix and Amazon and all these streamers, they're looking for original content. So everybody knows that, if you can be the first one to complete a film without issue, you're going to be able to be in the marketplace first. So there's a big race now, and a lot of people have made mistakes. I know every film that I know that's tried to start production in November had setbacks or pricey production delays, and so on. So I say that, to me, those are the three biggest ways that COVID has affected it. Andy?
Yeah, I'd agree. I mean, just putting a book into the price differential and cost differential of production, it's probably about a 30% premium you need to add onto your project right now, to account for all the protocols and PPE and testing, because your talent and your zone A's, that they're calling it, is you're actually testing every 3 days. So there's a huge cost that's added on it. As regards to the distribution, the commercialization of the project, I don't think of it so much as a pivot, but it was steroids, and it sped that up. I mean, we were going there, and the theatrical window was shrinking, but COVID just shot it, gave it the biggest shot of steroids you ever seen. Because now when you have the announcement by Time Warner, through their HBO Max vehicle, that they were going to put everything in 2021 through that release and test some theatrical, that was earth shattering. And AMC, you could see it in the stock market, the reflection of how AMC and the other theater chains got hit. Alamo House just filed for bankruptcy, I believe, yesterday. Alamo Draft House. So the theater chains obviously got killed. And I think I'm kind of bullish of what they'll be, say, in a year and a half. I think there'll be a great event type atmosphere for film screenings still. But it's never going to be the same. I don't think it's going to pivot back to where it was before. The windows are going to be completely changed. You're going to see all of these direct-to-consumer platforms, which you see now release similarly and simultaneously with their theatrical release. And that's just going to be how it's going to be going moving forward. You're not going to see this 6-month theatrical exclusive, save but a few.
Yeah.
Alamo just shut down their first ever location. I believe they just put that out, but they also put out their message. They're still around, but they got to go through a lot of financing trouble to get themselves back on their feet.
Yeah, and I think places like Alamo, I think have a fighting chance. I just think they just did not have a runway. I mean, AMC took 900 million in to survive, but because of those type, they have a niche, and they also try to niche their niche, so to speak. But they create an event atmosphere. So that is, to me, is how a theater survive, is you have to have this event. And some of the tentpole projects that come out through the studio and they're going to have 4,000 screens, they create that event. Yes, they do. I mean, whenever, the fanboys of Star Wars or what have you, they come out, or Marvels, they're going to get that. But for the other projects, the indies and the ones kind of in the middle, I think your ability to hit that event threshold is going to be higher, and it's going to be harder to do.
Yeah, and just a quick thing for our audience to help visualize this. When someone enters a real estate investment, or they invest, a stock or something, they always consider a beginning, a middle, and the end. I'd love if you just, for maybe a TV streaming project, like Kenny just threw in WandaVision into the chat. They've been producing during COVID, I think. He was hinting there. A new TV series or movie, what's the beginning and middle of end of finally getting to a distribution network like Netflix? What are those stages of financing, production, and finishing an investment?
So for an episodic, an episodic's a little different because the distribution pathways are different. And I always equate it to, think of retail, there's shelf space. So on episodic, there's still shelf space that you're dealing with, and you still have to get permission to be to distribute your film, unless you self-distribute online or through Amazon, and not Amazon Prime or Amazon Studios, but just Amazon. It's a little more of a venture play. You have to create, and I'll try to stay in venture vernacular. You have to create an MVP. You have to have something that you're going to market with, that you can show, hey, this is it. And then in film, that's either a pilot or what's called a sizzle, which will give the producer you're pitching, or the station, the network or platform you're pitching, an idea of what that project is, along with a series Bible. And also that series Bible has to spell out that you have enough content to get to season 3. So like, HBO, let's say they're giving you 10 million for a season. They're not making any money on season 1. They may start making, money back towards season 2. It's season 3 where they make their money. And so they're not going to dive into a project that they don't think that's going to get there. If you're lucky enough, and I was very close to this on one project, you'll pitch it and they'll pivot on you and say, hey, how about you do this for, let's test it as a feature. So I pitched a project to a large platform, and they said, well, hey, that's great, but that's a $20 million season. How about we give you $3 million to do the feature, and then they'll test it, and their algorithm will say whether or not it's going to be a profitable venture for them to do it in long form. So that's one scenario they look at. It is a long process, though, for episodic, typically. You have to have, like I said, you have to have your product in place to pitch them, unless you're already within that agency and studio environment in which they're taking the project out from. But from a pure indie perspective, it's very troublesome. And there's some theories I have, and Rodger and I have talked about this, that you can protect against that in terms of when you create your pilot, you actually create a feature, and then you cut the pilot out of that feature, and then you go shop it. And if you make a sale, wonderful, you're happy. But if you don't, you also have this feature length project that you can put out to market and give your investors a chance at recoupment. And then it becomes a success, and you go back to the same people that pass it and say, hey, remember that project you passed on? we just, did a, $20 million, box office. You want it now, and they'll probably pay more for it.
Right. That's the advantage of, so like with Netflix, for example, they were giving out very large MGs for the same reason I mentioned before, that they were looking for content. And MG is a minimum guarantee, right? Where it wasn't a Netflix original, what it's called, where they actually have a hand in producing the film and will invest in the film to a certain point. But they see this, they see the work that's done, or if in advance they see the talent, or maybe help get certain talent that their Netflix darlings attached to it, and then they will say they'll give you a minimum guarantee. You got a $10 million film of 8 million or something to help you complete the financing. Well, that's a little easier to do with episodics. Why? Because the risk for making one series is not as great as a feature film. But at the same time, it is just as difficult to get somebody to attach to it. It's just not, there's very similar things across the board that affect both. But in this case, your nut is a lot smaller with the episodic serial content, as we call it.
Awesome. Thank you, guys.
Mm-hmm.
Yeah, good stuff. One thing, kind of a similar question, or the context is similar, that, there's different asset classes. There's real estate, there's traditional, like the stock market, bond market. Like, investors always have a choice. If they have money that they're looking to invest in an asset class, there's the perspective, capital efficiency of, if I put it in the bond market, I kind of know what I'm going to get. I know where my volatility is. How do you kind of categorize the entertainment space as far as, expected returns? Is this swing or miss and hit a home run? Is it steady? Can it be consistent? Like, what are you guys kind of aiming for? And how do you attract money into this asset class versus, more traditional alternatives like real estate?
I guess I'll hit on, kind of the aiming, and then, hand over to Kenny and Rodger as it relates to the asset class recruitment for the investors. But, what we aim for is, gosh, I honestly, the way you set it up is you want your failures to be at a break even or above. And that's really, what we're shooting for, is that, yes, every time you're at the plate, with every project, it's really hard to make a movie, let alone finance it. But it is really hard. It's a long process. So if you're not swinging for the fences and swinging for that 10X, I don't know why you're doing it. But you're doing it with a floor, and you're doing it with some risk mitigation that's in place, so that if you miss, and again, there's a huge step from script to, $1 in the bank. There's a lot of things in the middle, and a lot of things can go wrong, even if you have the best laid plans. So putting in those risk mitigations so that your swing and a miss is a break even, that's a really great place to be. Now, I'm not saying every single one's going to be that way, but when you do that as kind of your blueprint, those that do outperform within that 25 project slate, you're really excited about. Those that underperform a little bit and may lose a little money, they don't kill you, because you do have those floors and those protections under there.
And some sort of guaranteed distribution.
Yeah, and absolutely, 100%. The guaranteed distribution that we have with the projects and alignment with the fund is, 100% why we can go to market and say to investors that, we can put in a floor, that along with tax credits, put into, the pipeline. But as far as, what you say and how you position this, Rodger and Kenny, why don't you guys take that one?
Yeah, I guess the original question was around like compare and contrast to other asset classes.
Yeah.
This is not real estate, right? This is not where you're going to you put some money in, get a pretty steady 5, 6, 7% return, and then if things go sideways, you just foreclose and you have an asset. Like, it's very much not it. if things go wrong here, it's a goose egg, right? Like that's the reality. So you're right. Well, not actually, no, not a goose egg, because AJ, your points are spot on. Like you can do some creative financing, tax credits, things like that. So your floor is significantly larger than zero, like it is in venture. So this asset class is somewhere in between. And then back to reiterate the thing we've said about 100 times. Then it becomes all about take away the real dogs, try to put the floor in place, like AJ said, diversification, all of those things. But if you're coming into it, Cavi, go back to your original framing. If you're coming into it looking for a steady return, you probably should go somewhere else. It's not going to be that super steady.
It's fair. Question from the audience. How will the fund source the potential portfolio projects, and what would the typical check size to each project be?
I'd say from because Mark or the general partners are also active producers. We have projects that we've been sourcing and developing even before the formation of Regiment, and the network we've created over the 2 to 3 decades in relationships with management agents, other production companies, distribution, and foreign sales companies. That is where the bulk of them will come from, and it's mostly that network effect that brings us the best projects. We'll look for projects that do have some attachments. If not, we certainly can do that. Average check size on a feature film, we're looking between 2 and 2.5 million for that, and on a small portion we'll get into development and packaging, but only on films that we're willing to come in and do that follow-on investment to see that project into production.
I'd say also sourcing is really not so much the issue as selection. We definitely will, the committees will be selecting the films together with a unanimous decision. So that's very important to note that if you wanted to touch on that, Kenny.
So as far as the actual modeling goes, what AJ touched on is spot on at 2 to 2.5. We do focus on diversification. So, the way the fund is actually structured is there will be kind of a recycling of the capital. So as kind of the original ones roll out, we will, up to a certain point, roll that back into the fund to really give, just a larger number of assets or investments under one umbrella to get that diversification without folks having to really think it through. And then as far as the timeline of each individual investment, we're looking typically in that it's hard to tell up front, but we're really looking at that 18-month window or so, give or take, 6 months on either end, for the film to get out there, start having dollars coming back, and have a pretty good idea of how the asset's going to perform.
Yeah, absolutely. Selections is going to be the biggest key, because you want to be the most popular person in the room. As say you have a film fund. I mean, everybody's got a friend, cousin, mother, sister who's got a story that they want to tell. The same thing is true when you're talking to the agencies and management firms and other producers. If you have equity dollars to deploy and allocate, you really need to be smart about where you're putting them, because there is no shortage of projects. The shortage is of good projects that have a chance to break out, and that's where we'll be diligent in our efforts to weed out the dogs, so to speak.
Good stuff. The opportunity that you were kind of drilling down on before, that kind of came out of COVID with the the distribution getting shuffled. Andy, you made a great point about it was a catalyst, like a steroid shot. You're kind of going this route, but COVID sped it up. Do you see this investment opportunity? Rodger mentioned the minimum guarantees from the distribution partners like Netflix. Like, for the life of the fund, do you see other entrants coming in and kind of squeezing out the arbitrage that exists here? Or do you see this opportunity where you've got these minimum guarantees and these tax credits to be able to hang into the distribution where the fund can deploy over the next, 3-4 years and still sees enough opportunity where it's generating a nice return.
Yeah, I think honestly, no time has been better to launch a content fund. I mean, if we were, into our first 2-3 projects or had some projects that are finished right now, that'd be the only way to be in a better position right now. There's absolutely a premium that all distribution partners are going to be paying for content, and that's across the board. And our empirical case to this is in 2007, 2008, there was a 100-day writer's strike that created just a huge stoppage of work. And at the end of that, there was a premium to be paid for finished content, and that lasted for quite some time. Well, we're talking about a full year. Thousands upon thousands of projects have been canceled. The studio projects that were completed or have been completed are putting their distribution dates off. So the engine and the independent and middle level studio and independent studios that used to churn out project left and right and fill that pipeline, they got shut down. And so for the groups that can, again, have that smart selection for the right project and can get that project produced efficiently and effectively on budget, on time, and can do so within this window, I think we have 24 to 36 months that there's going to be a premium that's going to allow us to catch up before that pipeline's back to normal, which with the thesis we have kind of played out aligns very nicely for us to capitalize on that.
Great. Very cool. Give another opportunity here for any questions from the audience. Brendan, do you have anything to ask or add? On mute.
It was that good.
Yeah, if there's any audience questions, feel free to throw those out. I was just thinking, people see that Georgia peach at the end of Ozark, the end of so many movies. Maybe you guys could just talk a little bit about the tax credits, and that's a really burgeoning thing for so many growing film locations.
Yeah, if they throw the peach on the end of the credit crawl, I think they get an extra 10%. So, I mean, no joke. That's part of it, is to give credit for where you do it. I think for the funds perspective, and I'll yield because I have been doing a lot of talking, we're going to look for a floor of around 25% that we'll look for to net out on our tax credit. There's, Illinois is at 30%. Not everything's going to qualify. Atlanta's amazing. Atlanta's, 35%, and they also allow for out of state, expenditures, which is why they're the #1 production place in the world right now. So, utilizing those tax shelters, if you will, or tax incentives to, again, put a floor, on a total loss, and allow us to also, as Kenny has advised me on the financing terms, but to have a better return on our cash expenditure. It's a good opportunity for us. And the good thing is also is that most studies have shown these tax incentives have been a big boon to the economy, and you've seen places like, I think it was a couple of months ago, that Pritzker here in Illinois just flat out, hey, we're going to 2026 before we even adjust these again and take a look at it, because it's been such a boon for the economy and for job creation.
Yeah, and I was living in Chicago when those first started, and just kind of seeing, me as a layman just walking around, seeing things pop up, hearing about people doing projects, that brings jobs to the local area. Atlanta's been doing it, Chicago and Illinois has been doing it. There's other places that pop up and present opportunities for films like projects and funds like this.
Exactly.
So any questions anyone wants to pop in?
Just a comment, because I just thought it was so funny, because you're right that the tax credit thing is a big deal and growing. But in Illinois, it is such a small community. Like AJ and Rodger ran me through, like, okay, here's the process of how you get your tax credits and all those things. And it basically was, Caesar just takes care of it. Like, there's one dude, his name's Caesar, he just sorts it. I'm like, brilliant. I love that approach.
All roads lead to Rome. Yeah, no, the film office does a good job, and they've been a good partner for both Rodger and the rest of the filmmaking community here in Illinois, and processing those. And there's a great due diligence that they go in to make sure that everything and all the expenditures are on the up and up, and they work with you well. But Caesar definitely is the one who holds the key here in Illinois.
Awesome. Well, thanks so much, everyone. This is a really cool webinar and asset class to talk about. Mike, any closing comments here? We thank everyone for coming here today, stopping by.
Just thank you, Brendan, for hosting. Really appreciate everything Rocket Dollar's doing in the space with people, allowing investors access to their self-directed IRAs to invest, and just the marketing partnership you guys have had. And Kenny, Roger, Andy, awesome. It was really fun talking about this with you guys, and excited to see where this goes.
And you can use Regiment or Rangers for $50 off of your Rocket Dollar account. We've had a few people just in the last week that name drop Regiment. So thank you guys.
All right.
Thank you, everyone.
Thanks, everyone.
Thank you for doing all our operations here.
Take care.
All right, we'll pop this up on YouTube right after this. So feel free to spread around the recording if you have anyone that would be interested in it. Thank you.
Thank you. Cheers, bye.